Welcome to the 2023 Market Measure Report annual webinar. I'm Melanie Moul, the Communications and Content Manager for the North American Hardware and Paint Association. And today I have right next to me Dan Tratensek, COO of NHPA. And joining us remotely, we've got Grant Farnsworth, President of the Farnsworth Group and Home Improvement Research Institute. So thanks for being here. We're going to chat a little bit about the state of the home improvement industry.
And it's quite a state.
So I wanted to just kind of start generally. What is kind of the temperature of the home improvement channel right now? We're recording this right at the end of 2022. Our audience is seeing this at the beginning of 2023. So Dan, why don't you kind of talk a little bit about what's going on? What are people kind of preparing for going into 2023?
Well, I think that's an interesting question because I think they're in many ways trying to figure out how to prepare for going into 2023. I mean, last year when we all sat around and had this conversation, we were talking about a lot of uncertainty, and it seems like we are still going to be talking about uncertainty. I mean, if we would have done this literally a month ago, things like rising interest rates, gas prices, all those kind of things would factor heavily into the discussion, inflation. And now here we are a few weeks later and gas prices are suddenly going down. Inflation seems to be, coming under control. So there's a lot of different things. One thing that I will say that kind of is reflective of that uncertainty is, as we've talked to a lot of the retailers that we speak with, so many of them have asked us the question, what are other people doing as far as budgeting for next year? What are you guys hearing about inflation for next year? What are you doing? And with those kind of questions, we've also heard a lot of people saying that we're budgeting later in the cycle this year than we ever have. We're waiting to get as much kind of data or as much insights as we can before we put pen to paper on what we think next year is going to look like from all those different kind of points of view. And I'll also kind of end by saying that I know, there's a broad industry, but the independent retailers in this industry always tend to skew a little bit conservative, not necessarily politically, but you could argue that too. But when it comes to budgeting forecasts, they always seem to want to take a very conservative approach with where they think we're going to be headed. And I think that's just the nature that I've seen over the so long of looking at this industry is that they tend to be very conservative in their budgeting. And even coming off of 2 years, going on 3 years of very strong growth for the industry, I still think that they're looking kind of with a very cautious eye towards what it's going to look like moving into next year. Grant, I don't know if you're hearing anything different, but.
Yeah, I think we're going to get into the details of what we think is going to be driving, next year and where we see opportunity, where we see risk. But as far as planning and how to be thinking about it, I think, what we're having a conversation with many of the manufacturers we work with, as well as the suppliers that we work with, is to be putting on your 2018, 2019 hat. That for now, Dan, as you said, almost 3 years running, we've had some pretty phenomenal growth across most categories and most channels within the building products home improvement industry. That's certainly not sustainable. Quite a bit of an outlier, particularly when we look at the DIY space, and over the last 2 years, really even looking at the pro space. So I think getting in the mindset for planning that is a more typical competitive environment, the way that it was in 18 and 19, I think if you can have that approach, if you can have that mindset going into 2023, you're going to have more level set expectations than basing it off the past 2 years. And you're going to be able to pull in some strategies and tactics that you found successful in 17, 18, 19 that I think, again, are going to be needed as we get into 23 and 24. That's really where we're encouraging our folks to just step back and not do year over year comparisons and comps and what did you do in 22 and just do more of it in 23. The dynamic's going to be changing such that it's going to be a competitive environment. Think back to the last time that you had to actually compete and apply some of those learnings.
Yeah, I think last year in our NHPA kind of annual wrap up, we made the statement that this year was going to kind of be a reset year where we came off of those 2 years of tremendous, really unexpected growth that we all know was really carried by the pandemic spending. And we thought, looking at this year, that it was going to be that kind of return to a more normal market pace. Now, of course, I think while we were closer to that normal market cycle in 2022, that there were so many other things that impacted this market. And it was just like one of those years where it was everything. It wasn't just what I would call kind of still the remnant pandemic stuff, the kinks in the supply chain, and still some of that pent up spending, and really, for those who could even blame some of the inflationary pressures on as a result of kind of pandemic conditions. But I mean, we also saw weather conditions that were kind of outside the norm that we normally see for this industry. And then, as we were trying to get our arms around things like inflation, well, part of the year you had commodity pricing that was experiencing so much inflation, and then that seemed to calm down, but then there was inflation on a lot of the typical hardlines categories. And so even when people have asked us, well, where do you put the inflation number? And I'll talk about where we ended up putting it. But we've heard everything from, I was talking to someone and I said, I heard one economy watcher who was looking at this industry and said they would peg inflation at about 7.5 points, and listened to his argument and said, yeah, that seems to make sense to me. Then I heard someone else say, no, it's closer to 14 points, and they illustrated their case. And I was like, well, that makes sense too. So, I mean, it has been another difficult year for folks like us to try and really understand what's going on, because there's so many dynamics that are going on at once that we just haven't seen in the past, at least, for a pretty simple fellow like myself.
Yep. Yeah, that's absolutely the case. There's a lot going on, and I don't know that it's all going to go away within the next 12 months. What may be minimized, what may be increasing in importance. I think there's maybe some indicators as we think about, the research and the feedback that, you're hearing from your dealers. So it's going to continue to be a pretty complex and evolving market next year for sure.
Yeah.
So Dan, you said at the top of the webinar, kind of the word of the moment is uncertainty, and that that came through in what you and Grant have just been talking about. But can you each talk a little bit about how that uncertainty fed into the projections that our organizations have made for 2023 and beyond?
Well, I can certainly speak. I've been a big part of in the past putting together the way NRHA makes its projections, and I learned it from certainly some of the folks that have worked with the Farnsworth group and some of the great minds that we've had here in the past of how we put our projections together. And a few years ago, I sat by and watched that entire model kind of break as we were seeing, just growth being driven by things that no one had modeled. And if anybody say, I don't know, maybe Grant will say he had that pegged, but I don't know. It was hard to peg the 20+% growth that we saw, followed up by another year of big growth. And this year, as I was settling in, thinking, oh, it's going to be easy this year, it really turned into the same kind of difficulties, but for very different reasons. And I know most of the people in and around the office over the last month or so, as I was trying to get our projections together, were probably tired of me wandering into their offices, asking them questions and what they're hearing and bouncing numbers off of them. And thanks to Grant and HIRI and the Farnsworth guys who all got together on a conference call with me just to talk me off a ledge a couple weeks ago. And I was like, hey, these are the numbers I'm coming up with. What shoot holes in this for me. And so it was equally as difficult, but I think the reason it was difficult for different reasons this year than it has been over the last couple of years, and it's really just some of the things we were talking about. In anybody who's building kind of this forecasting model, you understand that things kind of happen in cycles and most everything in the economy is cyclical. And so if A plus B equals C one year, most years it's going to be A plus B equals C. And so that's why those models kind of work. But over the last few years, we've really had to dig in and find additional insights and go deeper into the modeling than we've ever done to really more than anything to validate the numbers we're coming up with. And this year, when we pushed the things in the top of the meat grinder and cranked the handle and looked at what came out the bottom, I was like, wait, does this really make sense? And so we just had to really take the time and pour over what we were looking at and bring in other financial models and bring in other a little bit deeper dive to say, yeah, that's pretty much what we think it is, even though there were things that at first blush didn't make any sense. So I am very glad to be having this conversation and to have this behind me, and looking forward to a return where all those typical models will work again.
Yeah, Grant, what about on your end? Did you have similar challenges?
Yeah, so the Home Improvement Research Institute puts together, really a 6-month rolling size of market as well as forecast. And a lot of the inputs that the Home Improvement Research Institute uses are from census sales data, similar to what other organizations are doing. So looking at retail sales for landscape, hardware, home improvement. And I think, depending on the organization, if you're accounting for inflation or not, are you accounting for channel shift or not? That's happened a little bit this year. Are you accounting for some of the category changes in utilization when we think about, project sizes changing or shifting, maybe moving away from a DIY market to a DIFM market? So I think there's all of these variables that the folks then try to adjust the numbers in predicting where we're going to be for next year based on category, based on channel type, based on project size, project type, based on DIY versus trade. And even within trade, what type of trade? So are we talking remodel versus repair, or maintenance? So I think there's a lot of factors and moving parts right now that are just making it harder than normal to be able to come up with a real logical approach in how we build out our size for next year. Most of those that are building out forecasts for growth or declines, they're getting adjusted every other month, some cases every other week. So, Dan, to your point, when you think about, the retailers that may be listening in, you're probably holding off on finalizing your budget until you absolutely have to, because of how much is changing, how quickly. So I think that's to say there's just a number of factors that have changed this year in behaviors, in projects, in customer kind of segments and spending that is really hard to predict for next year. We've got some guesses, right? And I know we're going to talk about what do we think is going to be happening, what's really driving from the supply and demand side of things, what's really driving some of these forecasts. But I can tell you, out of the gate that we're certainly more optimistic on the contractor existing home side of the business for next year than we are for new home starts, and more optimistic than we are for DIY activity. So again, you start looking at these individual pockets in our industry, and you're going to get, in some cases, pretty drastic differences in what to expect for 2023.
Well, I'll be the first to say that I am not an economist. I'm not an Oxford trained economist or anything like that. And I think just to illustrate the point of the difficulty of looking at the things like you just talked about is, go Google, is the United States in a recession? And while there is a typical definition of what a recession is, and depending on what definition you use, you may say, well, yes, the U.S. is definitively in a recession, but then there will be 4 other economists that say, no, we're not in a recession. And again, you listen to their separate arguments and you could shake your head and say, well, yeah, they all make a little bit of sense here. But if you look at the conditions that we're in, and just even if you say, whether you say we're in a recession or not, and you look at the market conditions, they're so unusual in that you've seen the Fed just pound interest rates, and at the same time, you're seeing low unemployment, increasing wages, all of these things that typically, the housing market remaining somewhat strong, all these things that typically either things go this way or they go this way, but now we have some things going this way, some things going this way, and even these really smart economists are saying, yeah, this isn't an atmosphere that we typically see, but let's also not forget that what we all just went through with the pandemic and all those trailings of the pandemic, the supply chain issues. I mean, even today, I hesitate to label anything as a post-pandemic environment because just watch the news and look at what's going on in China and so on, where a lot of manufacturing or raw materials are coming from. And the pandemic is still very present in a lot of those markets. And so we're coming out of a condition that some could argue in the post-industrialized era, we've never seen something like this.
Yeah.
So I'd imagine, we're not the only ones kind of scratching our heads.
Yeah, and what I would probably challenge, a lot of the, retailers and independents and paint stores and hardware stores to think about is a lot of the stuff, Dan, that we're looking at and going to be talking about today is certainly holistic. It's more national in its approach. Yeah. A lot of the headlines you read are going to just pick and choose some really good clickbait. That's important and fine to look at and all well and good as just kind of a high level 30,000 foot view. Get to your specific market. Understand who your customer base is, first of all, what they're thinking, how busy they are. Are you serving pro? Are you serving DIY? So I think while it's important to understand at a national level what the forecasts may be, what the inputs to those are, I think it's also critically important to understand your specific market, your specific customer, look at your specific merchandising, because we may have vastly different stories from one dealer to the next, just given their markets, given who they serve, given their approach to it. So by no means are we saying, Dan, or at least I'll speak for myself, by no means is the Farnsworth Group, are we saying that this is the forecast for 2023 for all of home improvement, so you're going to follow suit. That's not the case. And so I think it's important to remember that while you may see some doom and gloom headlines out there, it's very nuanced. And what may not be great in one area, you may be really successful in another. So please keep that in mind as you think about your business, not just next year, but every darn year. Look at your specific market, your customer, your merchandising, and what's impacting your customers.
And that's a fantastic point, Grant. And I think that is very apparent as some of these roundtable groups that we moderate. A lot of times we'll start some of our conversations by just going around the group and asking, how's business? Right. And some guys, I'm up 19% year over year, while other guys I'm down 13%. And so much, particularly in this industry, is regional, that it's a good caveat that whenever Farnsworth, HIRI, any of the other groups out there, NHPA, look at these kind of size of market growth, you're really looking more at benchmarking and trends, and you really do have to apply the filter of what's going on in your market. Right. It's another reason why I've been really hesitant as I've gotten asked throughout the year, what do you see inflation at for the home improvement industry? And I could take two of our members, and they're both home improvement retailers, but one maybe has a 50% remodeler contractor customer base, and the other is a suburban hardware store. Right. And their inflation, and also this last year at different points in the year, but their inflation that they're experiencing, with their product pricing and so on, is going to be so different that it becomes very almost dangerous for me or someone to throw out, well, I think it's 11% or whatever it is, because then someone could look at it and say, well, it's 11%. Well, how much of that is weighted toward lumber, building materials? And if I don't carry those, maybe the real inflation that my store would be experiencing is X. So yes, everybody, as we talk through these kind of broad, these are very macro looks at what we think is going on, and you can't necessarily say Farnsworth, HIRI, or NHPA put the growth number at this, and I was above it or below it, or what you could really do is take a look at it and see what was the trend. Is the trend kind of above what we've been? Is it below what we've been? Right. And then just kind of use it as a bit of a mile marker, as opposed to, I've said this before about research that we do and research that you guys do, is not to diminish anything, but we're not doing research where we're evaluating the failure rates on artificial hearts where 0.001% is going to make a huge difference. What we're trying to do is give you an overall impression of what we see going on in a market space, not betting on whether or not that patient is going to be likely to make it through. So just keep that in perspective.
Yeah, well, let's tie it back to where we started off the conversation today, which is how do you think about planning for next year? And that's Dan, to that point. So go back to what you were doing. Go back to what your numbers were looking like in 17, 18, 19. What those typical growth patterns or decline patterns looked like for your business. That may be what you can be expecting going forward for the next couple of years. Start looking at the dynamics happening again within your market. But again, I think this ties back to planning and getting out of this kind of 2020 to 2023 mindset of it's got to be either really, really big or it's got to be really, really strong, or it's got to be really, really weak. Now, it's okay if you're looking at forecasts and predictions of, we're going to have 5% growth next year.
Yeah.
That's kind of okay and kind of normal.
Yeah, right. For all the years before this, we would bump along with few outliers where, we typically see 3-4% growth for the industry. Right. And wherever the dart hit the board with 3.2%, 3.7%, whatever, so it's almost more like an index line where you're trying to figure out, am I above the index line or below the index line?
Yeah, right.
Yeah.
So Grant, you kind of touched on this a little bit, but I'd like to do kind of a deeper dive into this kind of progression from a heavy hit on DIY and consumer spending in 2020 and 2021, and kind of see where we see that shifting more to the pro segment here in the near future.
Yeah, I think there's first of all there's a lot of DIY work that's been done over the past 2-3 years, and it's not necessarily pulled forward. I don't want to get into a conversation of this is all pulled forward and we're going to fall off a cliff here. There were projects created due to the pandemic, things that homeowners were not ever thinking of doing that because their lifestyle changed, because they were home, because they had time and the funds to do it. Sure, why not? So I think there's some DIY work that has been exhausted. So homeowners are now reached their potential on what they can do to the homes themselves. There's a lot of pent up demand that we had because we were effectively, contractors were almost shut out of the house for a 4 to 6 month period. We're still catching up on that backlog of work. The availability has slowed the ability of contractors to do projects quickly because they've got to wait on materials. Labor continues to be an issue. So again, this slows the ability for contractors to do a lot of work. So there's, going into 23, 24, there's still not only existing demand that's been there, but some pent up demand that we still have yet to get through. When we look at contractor project lead times, we're seeing those remain very steady month over month, quarter over quarter. We see some seasonal declines as we look at landscape and exterior trades. But otherwise, when you look at remodel or interior and utility trades, their log times are still very, very solid. We also have high home equities. Even if we come down 5 or 10% over the course of 2020 through this year, actually this year we're up over, I believe, 13%. This November, October compared to last November, October. And that's after we've already seen kind of a couple points come down nationally on home values. So because of how much we gained over the past 3 years, we can afford to give back 5 or 10% and still have an amazing equity picture on home values. So that remains there as DIYers and homeowners think about doing projects for their home. We still have really strong saving rates that came about through the pandemic. And we've also we're starting to see a return to low and slow mobility. People are not leaving their homes for a couple reasons. One, there's no availability of supply out there. There are no homes to be moving to. So you're going to make compromises. And there's a lot of research that shows that over the past few months, those that did make a move compromised on the home that they want. So these are people buying a house knowing that they're going to put money into it to make it what they want it to be. On the other side, you have people staying in their home because they don't have good, affordable options to move into. So instead, I'm going to stay put. I'm going to utilize some of the equity, utilize some of my savings, and really make this house what I want it to be for the next 10 years. The other thing I'll mention is intent. When we look at homeowner intent, it's still very high. And when I say intent, it's the percent of homeowners that want to do a project, whether it's a DIY or a model project. That intent has remained, and we track this on a monthly basis. We see over 80% wanting to do or start a project on a monthly basis. So intent is really, really strong, and I think that's a leading indicator about potential project activity down the road. The nuances here are budget sensitivities and price sensitivities that we haven't seen for a few years. As our firm has been saying lately, price is going to be the new availability for 2023. So work will get done, work wants to get done. The homeowner may say, instead of spending $100,000 to do my kitchen, I now have 80 to do it because the rate on the money is maybe a little bit higher, or I'm just a little bit uncertain about how things are going to go. So there's a financial implication, and there's a big psychological implication happening right now. But homeowners want to do this work, and they've likely exhausted what they can do, so they're going to be hiring pros to do it, and it's going to be on their existing home. So again, a number of factors. I know I just rambled through a bunch, but this is where we see the opportunity in our industry for the next probably 12, 18 months until we see a return back to some new single-family housing starts. It's really going to be on that existing home side, aging housing stock, high home equities, and people staying put in their homes, wanting to make it their own.
Well, the biggest thing that I took out of that I'm going to definitely send to my entire family is that Farnsworth Group is saying DIY projects are exhausted. I'm just going to say Dad is no longer in the DIY game. So any 2023 projects you guys had on my to-do list, we're taking them off the table.
They're not gone, Dan. They're just maybe not as furious as they were. So instead of doing 10 things this weekend, you may just need to do 5.
Yeah, and I think that, listen, there's a lot of things that are happening, and one of the things that I want to call attention to that I think a lot of people sat around 5-6 years ago bemoaning the fact that these kids these days, they don't want to own a house. They don't mind. They're living in their mom and dad's basement, and they're going to rent an apartment forever and all that kind of stuff. And I really think that we've seen, even pandemic, even with everything, that younger folks are still going to form families, and they're still going to buy houses, and they're still going to do DIY projects, and all those things are still going to happen. And we didn't come to this DIY apocalypse where no one is doing anything. And I think everything we've seen over the last 2 years shows that isn't the case. And there's other factors to consider about things that are taking place. I was listening to a podcast the other day that was discussing this whole, kind of urban sort of flight to the suburbs and rural communities, where a lot of people who kind of moved into the downtown and were attracted to that kind of city living are now starting the family formation and all these other things and moving into the suburbs and looking for a suburban and rural lifestyle. And part of the discussion was how a lot of these younger folks that were in college during the COVID years and were sequestered in dorm rooms for months at a time are saying, I can't live in an apartment. I gotta find something other than this. And all of those things, I think, are going to be good for the home improvement industry for years to come. And while, I know we're getting close to kind of sharing our look back at 2022 and our look forward, but I think in general, broader strokes, we think it's going to be pretty moderate growth for the next 3 or 4 years, maybe on the low side of what we would have typically predicted heading into the pandemic, but it's still going to be growth for the industry. And I think as we kind of work through some of these additional challenges with supply, product availability, and all those other kinds of things, we're going to return to that similar 3 to 5% growth, but it might take us a couple years to get back into that pattern.
Yeah, and I think once we do, Dan, I think there's a real big because of the demand, the household formation, and just really, really low supply. So I'll take a beat and remind folks that what happened in 2008 in the Great Recession, those fundamentals causing that, just kind of broad stroke, are pretty much opposite of what we've got today.
Right.
So back then we've got a boatload of supply, all these new houses being built, and very little demand that wanted them. Today we've got a ton of demand with very, very little supply out there. So kind of, again, at the fundamental level, we're teeing ourselves up for maybe this reset for potentially a couple of years. I mean, if you talk to some economists, they're saying by the end of 23, inflation gets back down to 4 or 5%. And it's at the beginning of 24 that we start ramping back up as far as being able to deliver on that demand. And so, there is an argument to be made that whenever that return to delivering to demand happens, it may be a really steep curve up. Now, is that in 24? Is that in 25? Is that in 26? You mentioned you're not an economist. I certainly am not either. But when you do look at those fundamentals, household formations, populations, the demand side of things, there is a very strong argument that when business returns, it could return in really great strength. When is that going to be? Is that a year? Is that 2? Is that 3 years out? Obviously, that's a big unknown, right? So
yeah.
Before we get into our final thoughts, I did want to kind of go back to this conversation of how work on homes is happening or will be happening, and get some insights, Grant, on any impact that has at the category level. So will there be a shift in what categories retailers are seeing?
Yeah, so both the Farnsworth Group as well as the Home Improvement Research Institute are tracking, project intent, looking at, are you planning to do something, and then what are you planning to do? And what I can say is that we're starting to see pretty consistent trends with a lot of prior years. Kitchen and bath are always up there at the top. They've got the highest return on the investment. Where we see some nuances are the outdoor spaces, outdoor living, landscaping, being a little bit more popular and having higher intent than what we've seen in prior years. So this would, again, suggest that this idea of expanding the home to the outdoors, or I'm home quite a bit and I want to be able to have some outside space, I think that is sticking. There continues to be, discussions around kind of home office, and I think as you look at the new housing side of things, you see more design implications for home office, homeschooling, kind of this more time at home hybrid approach, right? As most clients and colleagues that I have, pretty much I would say 95% of them have a hybrid work model right now, where they're in the office a couple days a week and then they're working from home, and maybe they're trying to manage kids in the afternoon or whatever the case may be. So. I think those conversations are still happening, and how do I accommodate for my lifestyle? But data-wise, we see the trends certainly supporting that outdoor lifestyle, maybe more so than we have in previous years. What I can also say, and what we expect, is that given the Inflation Reduction Act, we would anticipate a lot of energy efficient projects coming on board as well, due to some stimulus that's going to be thrown towards that, some incentives for putting in new HVAC, incentives for putting in maybe solar panels, et cetera. So be on the lookout over the next few years for those products that are related to projects that are going to fit within the IRA. Still some labor challenges around who the heck's going to do all this, but there's another source of demand that we haven't quite yet realized. So we may see some additional project trends in the coming years once homeowners really understand where the incentives are for these products and project installations.
Right. I think we've reached that point where it's time to crunch those numbers live in action. So Dan, if you want to kind of talk about where you kind of alluded to it already, but from what I've kind of looked at, the report that Grant provided and the report that you provided, I think we're kind of transitioning from uncertainty being the word of the moment to sustainable being the word of the moment. So can you talk a little bit about what NHPA sees ahead? Well,
and first talking a little bit about kind of wrapping up 2022, without getting into all the issues that caused me fits in the last month, but at about the midpoint for the year, we were tracking kind of industry growth in the mid to high 6% level over previous year. And as we entered Q4, we think some of that was slowing down a little bit more, decelerating a little bit more than was typical to see in Q4. And so when everything kind of sorted out, and again, even to what Grant was saying, one of the reasons that made it so difficult to really try and peg that number was because a lot of it was different categories doing well in different areas. So some retailers that you would typically see doing well, or you could benchmark against, because they weren't heavy in some of the categories that were doing particularly well or experiencing more inflation, weren't in the same ballpark as retailers who were in other categories. So all that, we put the number for growth in 2022 at about 5.9%. over the prior year, and that would bring our estimate of the industry size to about just a shade over $566 billion. So again, still a stronger than average year. The thing that I would caution is that so much of that is tied into inflation that if you were really trying to index it, it was probably a pretty flat year. We did hear that typically what retailers are experiencing is lower transaction count, lower unit sales count, but higher transaction size, which would all indicate that inflation is driving a lot of that growth number. As we swivel the camera around and get forward looking in our predictions, we think that next year is going to probably come in just a shade over 2% growth over this year. And then we're going to hover in that mid 2 to high 2 growth for the next few years. So kind of looking at a compound annual growth rate for the 5-year period starting last year, we're at about 3.2, 3.3% compound annual growth, which is more in line with what we would typically see, which again, speaks to us kind of having a market reset from those COVID kind of boom years.
Yeah. Yeah, and I'll speak on behalf of the Home Improvement Research Institutes. And for those that aren't familiar, HIRI, HIRI.org, is a member-driven nonprofit that serves the home improvement industry. Best source of secondary information that's available for our industry. So if you're not a member, would encourage you to join it. It functions like a co-op. So all of the members pool some money together to conduct research that's exclusive for that membership. And part of the research that they do for their membership is looking at size of market and forecast for the home improvement market. And so, Dan, similar to what you were saying, subject kind of, category movement and channel movement, there's a lot of, variables that HIRI looks at. They are projecting for 2022 7.2% year-over-year growth compared to 2021. And then for 23, looking at a 1.5% increase over 22. What is great about the HIRI information and HIRI research is that they also break it down consumer versus pro. So I want to share about 2023 that we do see some nuances when we think about pro versus consumer. Pro growth projected by HIRI for 2023 is about 3.6% compared to consumer growth, which is 0.6% or virtually flat. So again, I think we see more data that continues to support the position of existing home contractor opportunities are probably greater than that of the consumer or DIY. And Dan, to your point, we see in the data as well, we hear in the rhetoric that foot traffic is down, price point of product purchases is up, the size of basket when they are in store is up. You can read the transcripts from Lowe's and Depot and where they're seeing growth. It is in large price point product purchases. It is in pro purchases. Melanie, we've got a great quarterly tracker between NHPA and the Farnsworth Group that surveys your dealer and independent network to understand, what are they seeing in their stores? And we see and hear the same data, which is, our traffic is down, but our basket size are up. Our product, size of purchase is up. So, kind of some offsetting things happening, and much of this, Dan, to your point, may be due to inflation, but there is still some growth for opportunity. But you've got to be competitive next year. You're going to have to fight for share. You're going to have to fight to maintain loyalty and maintain your customers in a way that you haven't been used to probably for the past 2.5 years, where all you had to do is have product on the shelf and it's going to move. So Dan, love that you brought up the compound annual growth. We're starting to get back to a normal competitive environment, y'all, where you've got a plan and you've got to have proper pricing and merchandising strategies, where you've got to understand your customer and have some really good customer strategies going into the year, not just hounding your manufacturers to get some stuff on the shelf for you. So slow, modest growth for next year. Looks like we've got pretty decent growth this year, given how the back half of the year has certainly slowed.
Yeah, one thing I want to add on to what you said, because it's a really good point, Grant, is as we have talked to retailers about budgeting, one thing that we keep hearing again and again is a focus on expense control and a focus on inventory discipline. Inventories have climbed, inventory investment have climbed over the last couple of years. And we hear more and more retailers saying, I'm trying to get back to that inventory management discipline that I practiced prior to all the supply chain issues and the sales growth, because I need to make sure I'm on top of my margins. I need to make sure that I'm really trying to rationalize every SKU level purchase that I'm making as a method of just kind of getting things back to a more normalized kind of pattern of typical inventory management. And when it comes to the expense side, more and more retailers have realized that I've got to focus on expense controls where I can, because while I've seen payroll and wages increase, that's not going away, but some of these kind of ridiculous sales growth that I've experienced, that very well might go away. Mm-hmm. And so I've got to focus on how do I maintain the payroll levels, the wage demands that are out there today. And the only way to do that is to really look at how I can take a sharp eye at my expenses and do a better job of controlling those. So that's going to be some of the kind of budgetary lingering effects that we see this industry and it's not really confined to our industry, but small business in general kind of work through over the next few years.
Great point. Really good point.
Well, thanks for offering those insights today. I always appreciate getting to be a fly on the wall for these kinds of conversations. If both figure this out, the complete report, our annual market measure report, is available at your nhpa.org/market measure, and that is available now. So if anybody's interested in kind of seeing a little bit more data and reading through these kinds of insights, both from NHPA and from HIRI, they are included in that report. So again, thanks for joining us, and we'll see you next year, I guess.
Yeah, well, it's actually, by the time they're watching it, it's this year.
That's
we're
true.
Recording it last year.
That's true.
Thank you. And again, we appreciate the support from the Farnsworth Group and the Home Improvement Research Institute. And if you haven't checked out either TFG or HIRI, make sure you go to their websites and see what they do and how they can bring more of these kind of customized insights to your business and help you make better educated decisions.
That's great. Thank you both. Always happy to be here.
Thank you.
Thanks.